Yes, the trend in the global market has not changed. The market across the globe remain mixed. I'll tell you, at this hour, you can see that the happenings in different domains and also the issue of trade war has rattled the market, and most of these matured markets are still making what upward movement as we speak. And that is why I will ask any trader or investor in this market, either local or international market, is it the time to buy the dip? Yes. What stocks are you buying? And that means as the stock market is pulling down, most of the company's value has been also reviewed. I'll tell you that 50% of the market direction also affect companies and sectors. As we speak now, because we are seeing the general pullback in most of this market, this high volatility has also affected some companies, even though with value. And that tells you that as a trader investor, what you do at this time is to buy into a company that has potential to rebound, even when this trend turn up any moment from now. Because I tell you that no market remain up or down anywhere in the world. Now we're seeing a general trend driven by what? The fear of trade war and not other events happening in different domains. I'll tell you that most investors and also economic managers and companies managers are also taking advantage of what they are seeing on how to know to take the challenge situation of the trade war to boost their economy, to turn around their company operation for good. And that means you as a trader, you need to also follow the trend to see which industry sector are taking advantage of the pullbacks we are seeing, also taking advantage of the trade war, or uncertainties or fear to position in those companies and wait for what a better return. Yes, good that stocks are pulled back, and good are the good things in any market that either the market is going up or down. There's opportunity for us to make money if you understand how to combine your technical and your fundamental effectively in any word, in any trade you are entering or you are exiting. It's very, very important. I can tell you that for your technical analysis tells you exactly the right price to buy, the right price to sell. Why fundamental are always good to guide you to know what stocks to watch. That's why I say for you to pick your stock watch, or don't want to pick your stock to really put in your in where you look at the right price to buy. Yes, you look at your fundamental, look at what the economy is saying, and that's why today we're looking at the talking numbers on what on CWG and macroeconomic what indices that or data that have been released so far in this month of March. But we'll start from what is happening in matured market as usual. If you look at what is happening in Asia, I'll tell you that Asia stocks and market are really ranging at this point, almost flat because of what I'll tell you that this fear of trade war has continued to threaten China market. Even as we speak now, China itself also have not kind of import anything like US refined gas, let me say LNG, to their economy for almost 40 days. You can see they are all watching to see, and that's why I said that with China market ranging or retreating from all the state stimulus and also tech-driven rally, I will tell you that it's also an opportunity. I'll tell you that the government in China have also voted to increase spending to stimulate the economy, and that also have given. Also, don't forget that in South Korea before now, we have seen how technology stock has also impacted that market. We can see that that zone now and other region we have seen a slowdown, even when we have seen that Bank of Japan has kind of kept rate change in yesterday's outcome of their meeting or this morning. That also trying to reflect what. But I believe that why the Japan Central Bank is holding is to watch what will be the impact of this higher tariff on what on the global economy from US, knowing that Japan is an export economy. They want also to more. That's why they are limited to watch. But I tell you that there's already improvement or improving economic activities in Japan, and that is a good news for those that are trading in that domain. That also going to guide investor on what to do. But broadly, what is happening in the share market, they're all tracking what is also happening, in US market. But I tell you that most of the stocks in US are already also moving down. Since January, we have seen fund, kind of flowing out of US, and that has been a concern for them. And that is why even as all eyes are still on what on Fed, meeting outcome today to see, or what's going to be the decision of the Fed. But before now, it's better that they're going to leave it or change. And that's also another good thing now to work. Because fear of recession is already there, because they say that consumer spending is also started dwindling in that environment because of what inflation is already giving a sign that because of what when no, we are not importing most of this stuff. We expect to see that the few one that go there, expect to see that the cost, also go up. That is what we're also looking at. And Trump also we are looking at what is the direction of a Trump decision with Putin yesterday as regard the ceasefire between the two Ukraine and Russia, and especially targeting all the energy and and infrastructure that will stop. This is also going to lead likely toward peace at the end of the day. But I'll tell you that because of that move, I'll tell you that oil price or commodity market, we are seeing the price looking southward also at this hour. Don't forget that last week, at the beginning of the week, we saw oil price coming above $70. With this move, we're seeing as well that the thing sliding down again. But I believe that as investors are orbit, in Japan, that also has affected their trading index there. Speak now is all by 0.7%, and that of South Korea is also up by almost 1% also. I believe that these are the things also driving market in that environment as it remains unchanged at 0.5%. This Wednesday for me it's a good one and in line with the expectation of what market players or all those economies in that region. But good thing that as China and Hong Kong are also looking at to deepen their stimulus to also to drive, and also we expect that this tech driven rally will also resume again. We expect that once we are seeing a more positive economic data in China, that will also affect that region positive as already we have seen that Japan also movement is also reflecting in that regard. But if you look at what is happening in Europe, I'll tell you that European stocks also, as to speak, or European market also also slide down, and the south movement also down to the south. Why? As a result of all eyes looking at what will be the impact of continuing this fear of tariff. And not only that, the good news is that the lower house there has approved the debt package, or the expected that right now the packaging of their debt, so that of adjusting their constitution to allow them to boost the economy. Like I said, that Germany is one of the strong economy in that region. That also is also what we expect to happen. These are the things also. Don't forget that before now that the ECB there, which is the European Central Bank, also accord rate, and that also to boost the economy. And with decision of restructuring their debt, as approved by the lower house there, that is also a plus that they are all set to work to put their economy in the right shape. I see that also support that region. Any pullback in that will be because most of the funds leaving US are going to Europe, and that's going to impact most of the companies there. I believe that we're going to see a turnaround in that environment any moment from now in terms of their performance and also the economic data coming from there. Now that rates have been cost was going for almost 4 times, was better to also boost economic activities in that region. For that, I see that with this ceasefire, and also we expect that as natural gas price also start coming down, that also boost the eurozone economy and also their currency. Yes, look at what is happening in US. Look at what is happening in US as we speak. Let's see what's happening there. I would say that Jones and others have also looking southward yesterday, but this morning we're seeing them inching up just marginally. The US futures are looking up just marginally up at this hour. But I'll tell you that all eyes are still on what the outcome of a Fed meeting. And like I said earlier, that we're likely to see that rate remain unchanged, but details of where the economy is going because of this trade war and also trade policy of Trump, how it's going to affect the economy and also the upside side of the economy. I think at the end of the meeting today, the Fed chairman will also be informing the journalists and also the general market also will take advantage of it. These are the things I expect that also is driving the market across the globe in this mixed and high volatile mood we are seeing right now. But if we move to Africa, I'll tell you that we're still seeing some positive move there, despite that also there's a mixed market in Africa. But I can see that in South Africa, we are seeing that inflation for the month of February remain at year on year about 3.2%, which is good. Also, don't forget that in South Africa, they have cut rates for more like in the past 3 meetings in that region, in that side of Africa. That tells you that yes, are they going to? But I believe that this also is a trigger for them in their next policy meeting, either tomorrow Thursday, if they continue to cut. Don't forget that South Africa is like falling away from relationship or relationship with the US. How it will affect the economy. These are the things. But I believe that generally what is happening globally, you can see that most of the central banks of the world are holding to watch, just like what we saw the last MPC meeting here in Nigeria, that there was a hold for the first time for a long time. And also we're seeing a positive macroeconomic data are coming out in different domains, and that also is a sign that they are likely also either they continue after this whole, or also depending where the pendulum will swing, was a lot of impact of the global trade war, which mature the economy is experiencing now because of what Trump decision also to kind of look inward and see how can adjust trade to boost its economy. But that is the state of the market as we speak. But coming down to look at what is happening in Nigeria. Before that, let's look at what happened in Tokyo yesterday. After that, the Turkish benchmark index as we speak is down sharply by 7% as a result of the arrest of Istanbul mayor, and that also affected sent the signal to the market over there. And you can see that the market are pulled back because of the arrest by what, by 7%. Also, if you look at what is happening in Nigeria market this morning, yes, our market have been on the southward trend, but I'll tell you the sharp pullback was seen also this morning here. I'll tell you that the state of emergency in Rivers State, as declared by the federal government, has also draw criticism from the main oppositions, and even as we speak now, the nation stock market is also extending its negative sentiment and decline, as the benchmark index also shared about 311.14 basic point, represent about 0.31% or 0.3% as we speak. I think that the market is down right away, which also, if you look at the chart of, you can see that our market has extended pullback for how many you can see for straight 4 days now. If you are looking at it here, the market has been in the red. And that, if you also look at the index as we speak now, looking at the market data, I think that the index is trading at 105,81.41, representing about 294.28 basic point. That's about a negative 0.3%. This is the state of market. If you look at also the market rate is negative. I mean negative. White market we have seen already 24 users against what? Against just only 10 gainers as to speak now. This is the state of the market right away at this moment. And that tells you that the market is waiting for a trigger, and that will help investors to know what we are seeing this pullback. Like I said earlier at the beginning, is it the time to buy the dip? I will tell you that yes, market rate was already, we are seeing impressive number coming to the market, but market is yet to react because we are seeing funds still leaving the market. That's why we'll come to technical analysis. But let's look at also the numbers we're going to discuss today, and also the macroeconomic data that also have been released so far in the economy. Look at the GDP that was released recently for last quarter of 2024, and also the latest inflation data, which is a consumer price index for the month of February. Well, they are all pointing positive, which is good, looking up. But I'll tell you, most of these numbers were seeing economic data as a result of what the base, and also the the base year effect that also have supported this report. But good news that this also have triggered the move we saw in the last MPC meeting. That if I want to, as investor or trader, how the figure can help you to make what information. What is the figure telling you? What's it wanting you to? You need to pay attention to this as we discuss right away. But we'll start from the the figure from CWG. That figure also, we'll look at it. That will not take us to see the economic data that was, especially we're looking at the inflation that was released so recently for the month of February, and also the latest GDP for the last quarter of the year, that also signal that yes, year on year the GDP is crawling, even though it is positive. I'll tell you that the growth pattern is still very slow, and that's why we need to see more review our economic policy and strategy of the government to see where we are going from here. Good news that yes, that we expect to see a positive Q1 GDP, as we are seeing that figures are put. And then at the end of this Q1, when we start seeing also corporate action for April, that will give us a clear direction if we expect to see positive also GDP in Q1 2025. When we saw the unaudited account for for the last quarter of 2024, we knew that yes, that we were likely to see a positive GDP, which also happened. But then at the end of this first quarter, when we start seeing a audited account, the Q1 number for 2025 in April also give us a review or give us insight what we expect from the from the GDP for the first quarter 24. Yes, we look at this data from here. When you look at this figure that we just displayed, it sends a signal to you. And for me, for those that are also analysts in the class, this figure show that this company is outstanding. Yes, people might say to say, okay, because of the dividend expectation, from the earnings and all, but that you want to look at which sector is this company operating, where are they going? How do they start? Well, for the last 5 years, if you look at their figure, is there improvement in that figure for the last 5 years? Is there also improvement in their payout? Go to look at all this and where are they heading to? Once you know where the company is heading to, it gives you an insight how you should also position forward for better numbers ahead, because that is the only way you as a trader or investor can also benefit from it. It's very, very important that we pay attention to all this. They are very, very important when analyzing or when looking at the figures. These are the things that any investor should also pay attention to. If you look at this number, yes, you can look at the company, but we're looking at the group, especially. If you look at the series, there's input from the company to the group, but let's pay attention to the group result that was just showed that just been displayed. If you look at the top line, the revenue of this company, it moved from what from 23.53 billion to 46.53 billion. That is about 97% or even 98% up. For me, it's a good one for any reason. These are two double-digit growth, sharp one above 20% to reach just 97%. For me, it's a good one to signal that this company. It shows that the company also is expanding on its tentacle. Yes, they've expanded operation to some West Africa countries already, and that is a good news. And also, what the nature of these are technology-driven company that are into software production. You need to also know that is very, very important. Also, that all these banks also have a way of working with them, and that is also we are seeing this, geometric growth in the top line and bottom line is a sign what design investors should be doing in this company. If you look at the gross profit at the end of the day, cost of sales is very high. You can see fine. It's also a reflection of the deflationary effect we have seen in the economy in 2024. But nevertheless, if you look at the gross profit from 4.75 billion to 9.9 billion, for me, it's a good one. That is also more than 100% growth on its own. At the end of the day, you can see that the cost of finance, you can see it here. Like I said, cost of sale also part of cost of finance is part of sale because of cost of movement and everything is there. I can see that if you look at the company other incomes, again, you can see that it's also improved. You can see it here up there that there's an improvement in that also as to speak. But what is that? Look at the profit after tax. After also there's also improvement in finance income from 15 million to about 62 million, which is also good. But at the end of the day, look at the profit before tax, 1 point something billion to 4.12 billion. For me, it's a good one. At the end of the day, we are seeing that the company profit after tax also jump from 576 million naira to 3 billion. That is 3 billion. That's about the growth rate is about more than 400% growth. For me, this is a good one for every investor to look at and also give you a sign of what to do. But at the end of the day, you can come back and look at what is the look at what the profit after tax, and that is what every investor is interested. We know that in 2023 they had about 23 kobo earning per share, and that same year they paid 16 kobo earning as dividend. But in 2024, this company has an earning per share of 121 kobo, and out of it, 39 kobo is paid as dividend. You can see yes, they paid more than almost 80% of their earnings, or also more than 70% in 2023. But that same trend is not what we are seeing. But the good thing is that the company numbers become stronger compared to where it's coming from. That's why we're going to also look at the 5 years performance of this company in this class to see the trend they are moving. You must pay attention to that. The total assets of this company also, if you look at up here, before we go to cash flow, the total or what we call a net asset flow, consider that the total assets of this company also jumped by with almost 68 to 69%. You can see there 68.1%. Look at the total asset from 17.82 billion to, you can see, I don't want to read in all those, but just the one that are very important. Look at also the total equity, which is a shareholder form. When you let your net asset, when you let your your access to your from your liability, you can see that the balance there is your, that you can see that also in that regard, you can see that there's also improvement in that total asset. For me, it's a good one that you are seeing almost 200% in what, in total equity. From here you can see it from here to all this point, from 2.24 billion to what, to 6.63 billion. You can see this almost a 200% growth. One, it's a good one for investors that you need to pay attention to. These are the good things. Even when we see that every other profit ratio are looking good. For me, it's a pointer where this company is going. That means any pullback in this price for this company is a good buy. And those that also thinking medium and long, I think this is where it should be, because already I told you that for you to hold a company, must to look at the number to see whether you should go or you should sell. But with the number was saying this is a hold for me for if I need stock as to speak, because all it takes to hold the company is there. Growth is also inevitable, but we are seeing already a trend that the company is trending up, and that is a good one at the end of the day. Yes, pay attention to the cash flow, which I tell that we don't play with cash flow in InvestData, because it tells you when a company earnings is trending up and cash flow is looking down. It's a matter of time. That also reflects on the number. But now we are seeing that the earnings also looking up. We want to see if the cash flow is also looking up in that direction. That will be a plus for the company. But if you look at the net cash from or used from operating activities, you can see there is a improvement from 1.1 billion to 5.81 billion. For me, this is that where this company is also pointing to or going to. If you also pay attention, if you look at also the net the investment, they're good. Also, they're not looking bad. Also, if you go there to look at what financial activities, fine. At the end of the day, look at the cash, cash and balance, and at the at the end of it, consider it's also very positive from 1.45 billion to 5.84 billion. For me, it's a good one for investor in this stock. That means this is stock to watch. Yes, if you quickly want to look at, also when we come to chart, we want to look at the chart to see what is the chart saying at this company at this hour, because it's very, very important that you pay attention to it. But because of our time, quickly look at what are the things that we should look at from the macroeconomic data. As a trader investor, you have seen the GDP for 2020, 2020, the last quarter of 2024, and it's about, I can tell you that we are seeing that the oil and gas sector is, started contributing to that GDP. Before now, it is the non-oil sector that, but now I can see that oil sector has, because we have seen a change in economic structure since Dangote come on board, and that also is a good news for the economy. You can see that what the price was also cost in terms of inflation. Now, inflation slowing down, we are not surprised, because already towards the end of the month or the month of February, which have extended to this March, we have seen price war in terms of petroleum or payment coming down. That also reflected and supported it. Also, that means if that price will continue to the end of this month of 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 March, we're likely to see also inflation go down. And I said it one of the write-up or one of the comments I made in one of our group, that if we're going to see a decline in GDP, in inflation as we see, that will also inform a likely marginal cut, at the end at the next upcoming MPC meeting in May 19 and 20. Then that will more likely to that. But I believe that this though sign we are seeing that as inflation continues to drop down, to the south, that says that yes, we are seeing that prices are becoming stable, not that prices have changed or moving up, but relatively we are seeing stability in price. The decline is a result of what we said earlier because of the rebates, and that is that the movement in terms of price change have slowed down in the last month, from January to that end of, because even till now prices are not jumping the way we saw in 2024 from the beginning to the end of the world. We are seeing a slowdown in that, and also if you look at also the foreign exchange market, we are seeing a relative stability. That is that yes, also reflecting on the level of imported inflation. But good thing that as you are looking at your GDP, when you look at what are the sectors that contribute immensely or greatly to the GDP to post a positive one, that sector should pay attention. And I tell you that most of the sectors in the economy are reflected on the exchange. You see what are they doing? The service sector, or say service sector, the financial service sector, the manufacturing sector, the oil I've mentioned, the agriculture sector, which also will know that farmers are not in the farm as expected because of insecurity. Are they gradually coming back? Or even the species they are using, are they improved? Are they going? No, these are the things I want to look at. What is the contribution? Because you know that in that GDP. We know that yes, before now, non-oil sector have been contributing immensely, but we saw that means if oil is coming back and this non-oil sector also contributing, that we expect to see if the trend continue in first quarter. It tells you that the economy is also looking. But even when it said a sort of rebase, but I will tell you gradually, if we are getting our policy right, we're going to change the market, the economy, and also the market. Why? If we start seeing positive GDP also in Q1 2025, and we start seeing also no positive or a decline or a slowing down in inflation in March and April. That if we also there will be a cut at the end of the day, that is that we're going to see a positive capital market. That means the market is pulling back, but market is in a correction mode. It's not a time for you to start panicking. It's for you to target those stocks that has value and those industries that you see or sector that you see that has all it takes to rebound at the end of the day. That is where you should build your tent, and that is where to invest using what macroeconomic data. I will tell you that from the figure we're seeing so far, from the macroeconomic point of view, they are not looking bad. Fine, well, I said that the reason why they're not looking bad, they are looking more positive. But I believe that there is also benefit for it at the end of the day. The economy will benefit and the market. And don't forget that anywhere in the world where there's cut, in rate, especially NPR, going to see a positive stock market, and that the economic managers, corporate managers, like we also good kudos in Nigeria that be able to take advantage of even economic headwind in 2024 to post this impressive number, even at their Q1, even at the end of if we start seeing rate cut in second half of the year, I see a better market forward for Nigeria in 2025, and that also further boosts economic company performance that price feed on. For me, there's no cause for us to panic, rather to invest into value as we speak now. Yes, we'll quickly move to our chart again so that we can look at some of these charts to see where they are heading to. Yes, this is the index here, and because of our time, this is the general market index. But because of time, let's quickly call some indicators to see what is happening. Look to see what our money flow is reading. But I tell you from what we are seeing in the market internal that they were having 24 at that time and 10 gainers at 24 losers. That already gives you a sign that we're going to see funds also leaving the market. But let's see, we'll look at the indicators to give us more information on that before we also conclude our decision. But let's quickly take this one to 8. Usual, take it to 8. Yeah, you can see that the market is still below the T line, and that it's a weak market, so to speak. And I always say that you buy into a weak market and sell into a strong market. That's why I say you should target values as we speak now as a trader investor. Because that the market itself is weak. Even the last resistance has done even not a support as we speak now, because I can see that it has broken down this level to this where it is now. Alright, away. That we're going to watch very well. But if you look at money flow going to look flat and inching up a little to this system. This have gone as low as almost 13 before now, but trying to come up again. But let's watch as if market remain what bearish. That is why market is on a bearish mode. I will tell you that. You can see the correction. Can see as long market can remain below the T line. That's why we are seeing a weak market. But weak market also an opportunity to see that most of the stock dividend also look up because of price correction. But if there's a growth, a payout, and this price that will boost their yield at the end of the day. That's what we saw in CWG. If the price has pulled back, but because of the numbers we're seeing, the positive number, even the growth in their period from 16 in 2016 in 2023 to 39 in 2021, it's a good growth, but numbers are good, and also industry where they're operating, there's a lot of potential. We need to hold that position and watch. And quickly let's look at CWG chart here. Let's look at CWG chart to see exactly what this stock is doing. It's good that we pay attention to it. This is stock this morning. You can see this is a day chart already. We are saying here. It has rallied this morning to as high as almost 970, 975, which I put back to sell around the 9 naira as we speak now, or 8 naira 80 kobo. But I tell you that this stock is a strong resistance level here, which today it broke out, but then last profit taking is a day chart. We are seeing before this entering on day chart. We want to look at the last 1 hour, 3 hours of the market open by 10. You think that what had happened? You can see that it has opened positive here. See, as it has gone up here, like I said earlier, but as we speak now, it's not trading around what 8 naira, 8 naira 81 kobo as we speak. We can see volumes also on that stock right away. High volume, but we can also see good thing here that on the 1 hour chart, MACD is looking positive. Once the blue and cross, that is a sign of position taking. But money flow does slow down little below 50 to read there 45 points. But I see potential in this stock. If you take your chart here again on the 1 hour chart, it also trending up, but now slightly on top of what the T line. Anything below it will make it, but MACD is giving us a sign. But look at MACD now. There's also a kind of separation between this and this. It is not pointing to break out, but we are seeing the histogram here pointing here. It crossed over on this signal line will give you a bullish sign for 1 hour chart. But quickly, because of our time, then look at 15-minute chart for this stock before we call it a day. Our time is fast spent. Already shaking my hand, saying waving my hand actually. Yes, if you look at 15 minutes chart, you can see that it's below the T line, which is weak. MACD is already, you can see that it's already looking coming bearish now. You can see on 15 minutes our money flow is looking up. Let's wait and see on this stock as market react to the number, as all eyes are still on more numbers to hit the market. On this note, I will say thank you and see you on Friday. I also thank you for those that really took are taking advantage of the discount window to pay for masterclass. Today, I will see a lot of people paying, which is a good one, trying to take advantage of what the experts are going to share, how to take advantage of the oscillation of volatility we expect to see in the second half of the year. You need to plan your trade at the beginning and know when to position right. And that is why for those that will attend the masterclass on the 29th of March, as we finish on the 1st of April, we already start positioning in stock ahead of the expected factor that will drive the stocks, and as they move, you also smile to the back. Thank you and God bless you. Bye.